Okay, let's go. Hey guys, we're here for another episode for American Coin and Currency. This week we're focusing on what is our title here? I'm a little lost. We're focusing on my bad. Real money standards, gold and silver throughout history. I appreciate everyone being here. We had a little technical difficulties starting. So let's get some of the audio settings here. How's it going, Tom?
It's good. I'm joining you today with my iPad because, like you said, technical difficulties. But other than that, everything's great. How about you?
It's going good. Ooh, I just want to get these audio settings. All right, a little clipping. Anyways, yeah. So let me run that back here on the title. So yeah, we're focusing today on gold and silver, the standard of money throughout. They're still accumulating gold. This is a huge deal. Obviously we're hedging against inflation. That's the biggest aspect. In comparison to investors to nation states that are accumulating for their treasuries. So, we've seen this increase the price of gold, price of silver, commodities, overall markets. Last couple of years rising. Maybe get on your end on what's going on, and give, introduction of who you are to our audience.
Yeah. Well, today's going to be a really good show. We have a lot to talk about. The history of using metals as a form of exchange as opposed to barter. And I mean, we're so used to it nowadays, like that's just what we do. But back when this was invented, basically, that there was a game changer, like literally changed the course of history. Because prior to a means of exchange, like literally, you had barter systems where I have one pig, I'll trade you, whatever for that. You have chickens, or you have wheat, or maize, or you name it. So barter works, but having a dependable means of exchange to perform transactions is, like I said, we're very used to it nowadays. We don't even think about it,
Right.
but it's something really special that we created many thousands of years ago. The earliest, from my research, was around 1000 BC. So we're talking about 5,000, 5,025 years ago, let's say, give or take a few centuries. And that was in the cradle of civilization, also known as Mesopotamia. So the Sumerians were primarily in Mesopotamia at that time. They invented writing. They invented laws, first written laws, Hammurabi's Code of Laws, and they also invented money. Pretty sharp. So let me just read you real quick what I have here, because there's a lot of information. I couldn't memorize all of it. But in Mesopotamia, silver bars and ingots began to be used as a form of proto money for trade, taxes. That's probably why they wanted to create it, for taxes, right? No, something's never. And payments with temples. I guess the temples back then were kind of like banks are now, with temples fixing exchange rates between barley and silver. So they had a basis, barley being the basis and the value of barley, and they equated that to, I guess now, makes sense. And so that marks one of the earliest recorded uses of precious metals for monetary purposes. I've heard, and we'll go through this. Um, you you probably heard the expression "riches croesus." Riches king croesus, or I normally say just riches croesus, and King Croesus of Lydia, which is part of Greece. I knew this before. I thought that he was the first to use precious metals as a form for transactional exchanges. And I was kind of correct on that. Was actually the first to stamp the metal itself with designs, and I believe a fractionalization of like, so today we have a dollar or $5 bill or $10 bill. You know, it's fractionalized. So he was the first to, and that's where you get the expression, you know, riches creases. So that was back in 700 BC, which is a long time ago. And what's wild, Dustin, is that when you really dig into this, you'll see that you have certain, you know, dynasties, kingdoms, you know, you fill in the blank of what you want to call it, but they would scale up, and then for whatever reason might be, it would eventually, that whole system would crash. And a lot of times, if you dig into it, it was the money that, you know, the money that was being used that would crash it. Either debasement of the money,
Right.
or you know, the money causing inflation, then hyperinflation. And so
Right.
there's a lot of parallels. You know, I love history because, you know, you kind of get a feel for like what's going on nowadays. You know, what's the expression? History doesn't repeat.
But it rhymes. Yeah.
Yeah, there's a lot of things going on today that we can look at, and I do want to, you know, talking about the past and then bringing it into modern terms, so people that are listening and watching can kind of get an idea of, you know, one thing I realized the other day, Dustin, was, you know, I do this for a living. You do this for a living. We talk about this all the time, but so many people are completely ignorant, and not by choice, but just we're not taught these things growing up in school. We're taught other things that have real world value. We're, you know, but we're not taught
nonsense.
Isn't it funny how no one gets taught that growing up? How money is, how the Federal Reserve works, how the Treasury works, consequences of money in the system, consequences of not enough money in the system. So, you know, when I say that most people are ignorant to it, I was having a conversation with someone the other day who, this guy, he's a scientist. I mean, he's one of the premier turtle scientists in the United States, and a very smart guy. We started talking about money and the creation of money, and, you know, things that cause inflation, you know, hyperinflation. He was completely ignorant to it, and then I was like, wow, you know, so many people really just don't understand these things, and it's not their fault. Again, they're just not taught these things, and I think that's by design. You know, right? So hopefully we educate a little bit today, and we tell some good stories and make it interesting for our listeners and viewers.
Sure. Yeah. When you mentioned about like how old money worked, it made me think about how they used to clip some of the money as it ended up in different people's hands, and eventually would be debased based on just physically removing a part of the currency itself.
Correct.
Yeah. So yeah, obviously you can't do that these days, but
that's what happened eventually to the Lydian coins, King Croesus coins. They were used. That changed the entire game. They spread from Greece to Persia and outward from there. But over time, people realized they could snip off a tiny little sliver of gold, tiny little sliver of silver, and then just, you know, then people don't people, you know, you have to have trust in the currency that you're using, whether it's pounds, you know, dollars, francs, you name it, yen. And if you don't have that trust, the whole system doesn't work. So that's actually eventually what happened with the Lydian coins. Was over time they became so debased that people just stopped trusting that they were getting the full value for that exchange. So you go through a time where that collapses, and then something else rebuilds. So through the time scale here, you know, and you had other. What I didn't realize was, I'd like to reverse a little bit, Dustin. 2150 BC was the creation of the first shekel. I didn't realize that shekels go back that far in history.
Interesting.
But it kind of makes sense. Shekels have been around for forever. In fact, what's funny is not too long ago, supposedly a shekel, that one of the shekels that was used to pay, I forgot which, Judas, the disciple Judas, to betray.
Yeah, it was 30,000 of them supposedly were available. I just learned about that on Pawn Stars this week.
Oh, really?
Yeah, I
Well,
just saw.
one became available for sale. That was,
Oh, okay.
I don't know how they had that provenance to show it went all the way back to Judas, but
Yeah,
yeah, I thought that was really, really fascinating. So
yeah.
you had the shekels were Mesopotamia. So think Sumerians and the I forgot the culture that came after the Sumerians directly after. But then 1500 BC you had the Egyptians. That makes sense. They were super advanced. 800 BC, silver coins appear in regions overlapping with early gold coins, establishing silver as a monetary medium. Um, about 700 years after the first gold shekels. And then 700 BC, you have the Kingdom of Lydia, which we already talked about. Um, so it just keeps going through history. What I find really appealing and fascinating with this art and the stories again is being able to use um, things that happened in the past and kind of take that knowledge and perspective and use that in today's situation, in today's economy, in today's world. And lessons can always be learned. Unfortunately, humans don't learn lessons. I don't like we learn lessons, but then we keep repeating the same mistake. So yeah, so this just spread. It started in the Indus Valley, in the cradle of civilization, and then it just spread outward. What I find interesting in my research was there was really there was no mention of the Far East. Now I'm not sure exactly when China created currency, but I would have to imagine that they go back a couple thousand years. I don't know for I didn't again. I'm estimating here, um, but yeah, I mean it spread worldwide. So why do we talk about this? Why is it important? Again, look at what's happening today. Look at let's pull up our debt clock because I always like to do that.
Pull it up here.
Yeah, I read yesterday, the day before that, we are now at. It took 8 weeks to burn through $1 trillion.
Only.
Like, it's absolutely crazy. And anyone, our fans and our customers and our friends that watch and listen to us, I am telling you, if you don't start moving some fiat dollars into assets, um, you're gonna wish you had, because I mean, there's no way in the world that we could just keep doing what we've been doing, printing money, printing money, printing money, and not have a complete debasement, which we're already going through. I think the numbers from 1970, what year was it that Nixon took 71? I think 71 Nixon took us off completely any kind of gold backed fiat currency. So we're just, we're down. I believe the number is 90%, roughly 90% of purchasing power from 1970 to today. I always like to use stamps as an analogy for the decrease of spending power in your dollars. I bought stamps yesterday, and forever stamps are now 87 cents a piece. I
Crazy.
I remember clearly when they were 25 cents, and that wasn't too long ago. It really wasn't too long ago. Now they're 87. So if you're hoarding cash, if you have an investment plan on
I heard
mattress,
they I heard they use stamps as currency in prison. Actually,
this is true. And
yeah.
so, Yeah.
It holds value. So there's a
True.
dollar value to it, you know.
Absolutely. Yeah. So we're going to see something happen at some point where uh, this whole system is built on trust, and
Yeah.
I want to see is our system falter or fail because everyone is affected negatively for the most part. So hopefully it gets figured out. I just think that it's not going to anytime soon, and unfortunately, we have to go through something really bad happening. Our government is reactive, not
Right.
proactive. So when things get really bad, then they're going to have to try to come up with a solution. But we're rapidly approaching $40 trillion in debt. Let's say we went to another 2008 financial crisis again. The Federal Reserve, in my opinion, they don't have the firepower to you know to handle something like that. Of course, they can print more money. Of course, we can print out of it, but at the detriment of everybody. So if we went through another 2008 or another COVID scenario, you know, we're talking close to $10 trillion that is going to need to be created to get us out of the hole, if enough. So now we're at 50 trillion. Right now, the portion of our interest payments on our debt is 10%. So 10% of, actually it's a little over 10% of our GDP goes towards alleviating debt payments, and that's just going to increase and increase. And so what they do is they create new money to pay off old debts and just keep rolling it and rolling it. And now with interest rates, where they are, it just makes it more difficult. So yeah, I mean, I think it's really important that we have the mindset of and the knowledge of the historical past and scenarios that happen, and then here and then moving forward, um, because yeah, I mean, any kind of asset that you hold, Dustin, whether it's a gold coin, silver bullion, rare coin, um, any kind of high end collectible. I have comic books in my office, stuff like that. That that will stay the way it is, and the value today. Let's say it's worth 5,000 today. Well,
Right.
in a year from now, 2 years from now, if you had $5,000 sitting in a bank account, let's use 10,000 because it's easier to do the numbers in my head. If you have 10,000 in your bank account and inflation, now core inflation they're saying is approaching 2%. Well, who cares? Core inflation is X food and energy, the two things that we spend the most money on. So real inflation is double digits. So in 2 years, your $10,000 is now, eight, $7,500 in purchasing power. Where if you had a $10,000 rare coin, a $10,000, well, you can sell that in 2 years, and that inflation is not going to eat into that piece the way just sitting in cash does. So, me personally, I've been buying gold. I've been buying silver. I, of course, have lots of rare coins in my collection and other things like that. But I funny story. I have a collectible. It's a basketball card um, of who's the guy who died in Kobe Bryant.
Kobe Bryant, yeah.
And I had bought it years ago, and like bought it, he died in that helicopter crash.
Right.
I put it away, and I totally forgot about it, right? And then I pulled it out, and I was like, let me send it in to get graded. It is a Panini card. It was already kind of in like an encapsulated case, but it wasn't graded. So I sent it to CGC, which is a subsidiary of NGS, and that, which is NGC basically, and
Yeah.
all those. And I got it back yesterday. It came back. I don't have it here to show you, but it came
Oh,
back.
you got it back.
Yeah, it came back a perfect 10, which I was like,
Whoa.
and then so I started looking, and I went to CGC and I scanned the QR code on the back of the encapsulated card, brought me to their site, and I'm looking, and you can see this card. It's one of one. I was shocked. There's no other, none of this, and it's an authentic. It's not an auto pen. It's an authentic signature. My point being is that um, that
Huh.
piece back then is worth so much more now than had I just had that in cash from what is it, 7 6 7 years ago to now. And I think there's a lesson there, which is sitting in cash sometimes is a good thing, but in times like we are now, where inflation is at your heels all the time, I think this is not investment advice, but it's just my that, and it's what I do. You have to have some assets, and
Right.
so if you like coins, if you like rare notes, here at American Coin and Currency, we have pretty much everything that you could want. And if we don't have it, we can source it for you. So I'd love for our listeners, if you are looking for something like that, to reach out to us so that we can help you start moving, just preparing, right? I'm not saying all your money, like that'd be crazy. No, just a piece, 5 10% of your assets. Let me work with you. Let's move them into tangible assets that will absolutely outperform cash and most likely outperform the S&P 500. And that's the gold standard, right? If you can outperform the S&P 500, then you're gold. So no pun intended. So yeah, I know I'm kind of on a tangent all around, but these things excite me, and I think it's important that more people know. I didn't realize how naive, and not on their fault, not it's not their fault, but how naive, maybe naive is not the right word, how uneducated people are to the system and how it works and how their money is not safe. So yeah, so we have a lot to discuss, and that's just the beginning of what I have in my head today. Um, but yeah, if you want to add anything, that'd be great.
Yeah. Yeah, I feel like a lot of people like fight for the crown, when it comes to dollars. And I'm always trying to educate people about how money works and where does money come from and why does it even have value. Um, and then people just relish on dollars. Like they're just like, oh, if I don't have this, it doesn't. I get it. There's an emotional attachment to it, and then there's a monetary value that's short term. And my biggest thing is that yes, it pays your bills, and yes, it pays for your food, your energy, your travel. But when you have it sit for more than 5 years, it's always been, and there's always an inflation within 5 years. That I've seen, at least in being in different industries. Um, and in the last, what 15, what is it, 17 years since the housing crash, the previous housing crash. Obviously, there's little ones in between. Um, that the U.S. dollar has significantly fell in comparison to purchasing power, and you can see that with commodities, precious metals, cryptocurrency, the housing market, just everything, just buying, a movie ticket, at a at the theater. So, um, you can tell that these things really do apply to our everyday, um, and that someone's not educated are going to be on the sideline when their money is being debased in their bank account, and yet the money still looks like it's still $10,000, but the purchasing power in the next 2 years, like you said, it's going to be $500. It's like 20% at least. 10% a year. That's what I've seen. And especially in the COVID times, like it jumped from food purchases 3 to 5 times value, especially around sugar and wheat. Those are huge, in comparison to like buying certain like a pound of sugar or wheat, and then its price has increased like from $1 to $5 kind of thing. Um, so yeah, I mean, that's the biggest thing is just educating people on like how to make their money work for them instead of them working for their money.
Correct.
Um, I mean, it's hard to educate people, especially in this kind of condition sometimes. I mean, maybe now a little bit easier, but give it 10 years ago, it was hard for me to reach people, to be honest. Like, and it still is, um, but I'm still constantly educating people, like, at least a percentage, like 10% of your allocation, to put into something. You know, if it's stocks, if it's precious metals, graded coins, numismatic, or even cryptocurrency. Like, there's just so much going on the sideline that it may look like the price that's increasing when it comes to all these assets, but realistically, it's inflated when it comes to the dollar value. And that's, I feel like people are, it's kind of misconstrued on like why assets are more valuable than just holding cash. But short term wise, it, you know, if you're if the market conditions, um, you know, for some reason fall, you know, for instance, like recently, like, you know, precious metals kind of took a little dip, you know, stuff like that, or you know, numismatic coins as well. You could have some cash on the side to purchase these dips. So, I mean, there's good reason to have cash for short term, but like long term, I mean, every fiat currency has failed. I and euro would probably be a strong case, maybe. BRICS comes out with a currency itself. And that's another conversation to bring up into this podcast is the about BRICS and how they're kind of trying to de-dollarize, you know, their use, um, and how you know China and Russia are really kind of taking stronghold outside of the petro-based U.S. dollar, which was kind of the use case before, but now they're doing transactions outside of the U.S. dollar. So that's it's kind of my take is the education is huge, and what we're offering is significant. And for somebody that's uneducated in investing and understanding how their money can work for them, I think this is a good place for them to be.
Agreed. Agreed. I had to, again, technical problems. Sorry about that.
Yeah, this clipping. There's clipping when I talk. So
No, I had to charge my iPad. So, what I'd like to talk about a little bit, Dustin, is let's fast forward to modern times.
yeah.
So, one thing that I've had a lot of customers over time, we've discussed and they've asked about is 1933. So,
Right.
felt by presidential decree, you had to turn in your gold. It was either a 5-year prison sentence or $10,000 fine. $10,000 in 1933. That's
A lot.
an exorbitant amount of money. So people have asked in the past. So did that take us off the gold standard? And then you go to Nixon. Like what would happen in between? So in '33, like I just said, Roosevelt, uh, supposedly because of the Great Depression, um, we were taken. Well, amid the Great Depression, President Roosevelt's executive order 6102 requires U.S. citizens to surrender gold holdings. The U.S. abandons domestic gold standard. So they in the Bland-Allison Act, which you might have heard of before, that was back in 1878. That basically and the Sherman Silver Purchase Act restores silver purchases and miners, but it put us on the gold standard. Excuse me. And it actually goes a little earlier than that, but the Bland-Allison Act really cemented that in place. So and it was kind of like a seesaw back and forth. 1913, the Federal Reserve was created, and
Mm.
so in 1913, the Federal Reserve Act places the country or notes. I'm sorry, notes to be 40% backed by gold, not 100%.
Wow.
And then we keep moving. 1933, we know what happened. Unfortunately, so many rare coins, beautiful coins, were just put in the furnace and melted.
Oh,
And it's
that's
and,
horrible.
oh yeah. So here's why you can't trust the government. They did it in 1933, and I don't know how many millions of coins were turned in, but many, many, many people turned in their gold, and they received, I believe it was $18 or $20 an ounce for their gold, at that time. After they exhausted that, the next year, the government comes out in 1934, and they come out with the Gold Reserve Act, raising the gold price to $35 an ounce.
Oh,
So they get everyone's gold, and then they raise the value of it.
of
And
course.
now, my understanding is from 1934 up until 1971. That was basically the value of gold. It really didn't change. It was
Okay.
pegged $5 an ounce. 1971. I'm sorry. This is important too. 1944. The Bretton Woods Agreement, which is that basically the Bretton Woods Agreement was the creation of the New World Order and a new monetary system with the United States holding the reserve currency of the world. So the Bretton Woods Agreement pegs global currencies to the U.S. dollar, which is convertible to gold at $35 an ounce, creating the post-World War II monetary system. And then fast forward to 1971, and this is when all hell breaks loose. You know, let me explain too, Dustin. Prior to 1971, if Congress, if the government, if they wanted to spend money, they couldn't just go to the Treasury, go to the Fed, and have money created because it was pegged to gold. So you had real checks and balances. We didn't have the. I mean, if you look at our debt then compared to now, we had that much gold and that's that much debt. Of course, the government did make T-bills and notes and things like that at that time, treasury notes for additional debt instruments to fund things. But uh, once 1971 hits, President Nixon ends dollar convertibility to gold. And what's funny is that I saw a video not too long ago of Nixon when he, addressed the American public, saying that this is what was going to happen. We're coming off the gold standard. Our dollars are not going to be pegged to gold anymore. They're going to be free floating, a pure promissory note, bringing us into modern fiat currency. But he's in front of the camera, and of course, even if you watch news today or you're watching these politicians, they're always doing what they do for your best interest, right? We're looking.
Yeah.
We want to feed the homeless. We want to do this. They always have
Some agenda, yeah.
it's a really altruistic agenda of why they're doing this. But the real reason is behind that. So what he said was the reason why they were doing it was to protect regular investors because speculators were the problem and they were running up the values of precious metals. Which, if it's pegged, how do you run up the prices? Maybe I'm missing something, but that was what they sold to the American people. They're trying to stop speculators, which you know we have lots of speculators now. So, anyways, once that happens, it's off to the races, and the printing machines start, and then you have the debasement of the dollar, and we get to where we are now, where now we're in just this rapid free fall of spending and this vicious loop of paying off old debt, creating new debt to pay off that old debt. You're paying off basically investors with new money. That's a Ponzi scheme. Like that is a Ponzi scheme. When you bring in new money to pay off old investors, that's the definition of a Ponzi scheme.
Yeah, that's true.
Hold on one second. Sorry.
Oh, no problem. Yeah, I wanted to get into. So you mentioned about the gold standard with Nixon. Let's see. I know I part of my notes here is to touch about about BRICS and also the central banks in general because they're purchasing quite a bit of gold for the last 14 years. So maybe if you have any tips on like central banks and how they're accumulating gold and what is like our future look on that, like U.S.
Could you repeat the question? I had a FedEx delivery guy just walk in my office. I had to sign.
So yeah, what's your take on central banks purchasing gold?
Look at it. Look at that for what it is. I mean, why are they buying gold? What? Why are they then? Why are they not buying other countries' debt? And which they still do, but why are they not buying as much as they used to? That's because they're, I think, prepping for the future. I think you're going to see central banks start also building crypto treasuries, which if some countries already are doing that, United States,
Yeah.
my knowledge, but yeah, the central banks around the world now own more gold than they do debt instruments.
I mean, it's their best interest,
right? But what are they using to buy that gold? I guarantee you, they're using debt to buy those assets because they're just
right?
creating new debt to buy those assets. If anyone else, if you had a business and ran it like the government, you'd be out of business.
True.
But we can just print money. So I have a question for you, Dustin, and anyone, if you can answer this question for me, I would love for you to reach out and just DM me or send us an email. Since the Federal Reserve and the Treasury can create money out of thin air, they can print unlimited amounts of money. Why do we have to pay taxes? Why do if you just create more money?
I think it's to keep the population in a certain demographic, to keep them poor, and to make it so that certain threshold, or not threshold, but certain the wealth of the world to be concentrated into a select group of people who have control of the over 99%, but more than just the monetary aspect, but because of the regulatory scrutiny they can create because of the monetary reasons. So beyond the money, but I think because of that, people are kind of, I guess, accustomed to certain parameters. They don't have access or knowledge.
I don't have an answer. I don't have an answer for it. This is like kind of a rhetorical question.
Yeah, it's a rhetorical question.
I've thought about it, and participation, the illusion that we actually have a say in what happens, that we're contributory towards what happens in the United States. I pay my tax. How many times everyone, I pay my taxes, so I should get this and that. But the other thing I thought of with that is, if people didn't pay taxes, how bad would inflation be if you just create, which they do anyway, I guess. So it's like, I don't know. It was a fun thing to think about, and I just couldn't come up with an answer. So if anyone has something they want to add to that, please reach out to us, because I'm really curious about that.
Yeah, I feel like they would create another mechanism where it would entice people to either, one, by fear, or as like a way to opt into the monetary system. So like if they didn't have taxes, obviously fear is the one, but maybe there could be like some type of incentive, like lower prices for commodities, or purchasing power could be more. I don't know. Yeah, I feel like, yeah, that's a really tough question. Yeah, I don't know.
I had so have you, in 2008, and again, this is why people should own. Of course, listen, you own stocks, you own bonds, you own mutual funds, you own you name it, whatever securities you like, annuities. Uh, but in 2000, the reason why you should have tangible assets included with those other assets, and by tangible assets, like I said, it doesn't matter if it's graded coins, which I obviously prefer, or graded notes, or you know, graded comic books. Got lots of these they hold their value. Um,
Yeah, nice.
but the reason why you should have things like that is because in 2008, as we all know, you had the TARP bill, which looking back, it was an extraordinary amount of money that the Treasury asked Congress for. And it was $900 billion. And that was the bailout.
Jeez.
To bail out the banks and bail out AIG and General Motors and Ford and all these other large corporations that the government took a proportional interest in until that was paid off. Um, but this time around, more and more I've been hearing about a bail-in. Now, I've known what a bail-in is for a pretty long time, but when you open up a bank account, I don't care what bank you open it at, you agree that you agree to basically a bail-in when you open that account, when you sign those documents. So a bail-in is where, let's say we go through, not if, but when we go through another 2008 type cycle situation,
Mm.
your money that's at the bank, you have $100,000 at the bank. Well, now the bank is allowed to go in, and they've been able to do this for a long time. You just never have. They can go into your account, and you are now a stakeholder in the bank. So they'll take that 50,000 of your 100,000, and you get a small percentage. Basically, think of you're an investor in the bank now, but you have no say in it. That's a bail-in. So anyone listening, watching us, I implore you to look that up. It's never been done before, but it is there, just in case. If you have tangible assets, if you have them on your person, if you have them at wherever, just you have access to them. The bank can't touch those. You know, Whereas if you have $1 million in the bank and then all hell breaks loose, like a real black swan event, an economic black swan event. You have $1 million in your bank, and now that $1 million was invested into the bank, and through a bail-in. But if you had been working with us, with American Coin and Currency, and putting together a portfolio of rare coins of gold, silver, palladium, platinum, well, you at least have that, which is more than most people might have if that scenario ever takes effect. Which, knock on wood, I pray it doesn't. And this is just planning. I understand it. You understand it. We talk about this a lot, Dustin. But people, we all get so tied up in our day to day, and we don't think. Most people don't think about these things. They just don't until it happens. You don't think about it. But planning is everything, right? And what the expression, an ounce of planning is worth a pound of cure. It's so true. So I'm just saying, take a little time, reach out to us. Let's see if we can do something for you. Let's see if it works, if it's something that you're interested in doing. And if not for you, for your children or grandchildren. These types of assets that we have and that we have customers all throughout the United States and Canada, um, they get it, and that's why they do business with us. Not just for that reason, of course, but I actually have this conversation with almost all of our customers, and I tell my coworkers here to do the same, um, because it's good knowledge to have, and it's just like I said, it's not if, it's when. We're going to hit 50 trillion in debt. Our our interest on debt now eclipses how much we pay for defense annually, which is close to $1 trillion. That was never supposed to happen. So planning a little bit and having the right kind of assets. And again, it's the right kind of assets. There's a use case for all coins, but some coins don't. They'll hold their value, but they're not going to give you the kind of return that other pieces might give you. And that's when you need someone like in our company and the other people I work with here to advise you on to this is the coin you should have. You know, you're better off buying one coin. Excuse me. You're better off buying one coin for $50,000. That's a really good coin, very low mintage, low population, hard to get. You're way better off getting that than getting, 1,000 or let's say 500 just generic silver eagles graded mint state 70 first day of issue. Because that one piece is going to absolutely outperform having all those just generic silver eagles. So that's really where our expertise comes into effect in advising customers. Okay, this is the piece you should get, as opposed to getting all these coins. But you know what? Some people love to have those coins. So some people have the ability to do both: get the $50,000 and buy $50,000 in just graded silver, generic silver eagles. So yeah, I would. I definitely would say, excuse me, that it's not if, it's when. Debt. Keep watching our debt. Keep watching. Our government shutdown that's happening now. We all know about that. Uh, the just amount of spending that goes on. It's disgusting. The amount of waste, fraud, and abuse is disgusting. And you know what? We're not going to change it. So you got to look out for yourself. And by that, I'm talking to everyone who's watching and listening to us. You have to look out for yourself. You have to plan. We will help you with that. And we didn't get into the history as much as I would have liked. I mean, this hour goes by so fast.
It goes quick.
Much to talk about, but I think we hit the key points of like 3000 BC is when it started, and then you had Lydia, which King Croesus, and they created the first stamped coins, and then I'll give you a quick story. It was in Mali. You ever hear of the country of Mali? Mali. It was a West Central African country, going back a long time ago. The the king there, I'll remember his name as I'm talking about it. He's known as the wealthiest person to have ever lived, more than John Rockefeller, more than Vanderbilt or Carnegie. Um, he had so much wealth because he controlled where he was in Africa. It was kind of the cross sections of where all these trading routes would go, and so around him were gold mines, diamond mines. He was just in a great location. So they mined tons and tons of gold, and and so when he would go, there was a historic. This is a historical story about this king, this emperor. He left Mali and he went to Mecca. They were Muslim. On his trip to Mecca, they had a caravan of just horses and camels and people, like miles long. But every city that he went to, they they spent, they gifted so much gold that the price, like instant inflation. So the day before, you might be able to go get bread and an apple for, let's say, 1 shekel, and then after he left and carried on, there was so much gold in this area, so much just wealth that was dropped off, that now that bread and apple would cost you 10 shekels. It was like
dang.
Everyone had gold all of a sudden, and so you kind of see that happening now a lot more. And yeah, I mean, I'm still trying to think of the guy's name. I can't think of it right now, but interesting stuff that happens and continues to will happen again at some point in the future. But yeah, just get your ducks in a row. Um, have some assets, have some physical assets, tangible physical assets that you can put in your hand. You have access to it anytime you want. I sleep better at night knowing I have those kinds of things. I'm not of the government, at the mercy of the stock market, or anything like that. And I think the people that listen to us, Dustin, will be rightly rewarded when that time comes.
For sure. Yeah, I mean, anyone that has patience will always benefit from their patience for sure. Especially when holding commodities or precious metals, numismatic or collectibles in general. I mentioned last week about like the Tickle Me Elmo and Cabbage Patch Kids and um or even Pokemon. Like these things have long term value. So yeah, anyone could just collect things and hold on to it, and you're gonna win pretty much at this point. Um, but yeah, the clip for a second there.
Mansa Musa was the guy's name. Well,
Oh, nice.
around 14th century.
For sure. Um, yeah, we got a lot. 4 minutes here. I wanted to open it up for some questions. So I have questions for you guys, for our viewers. Should the U.S. return to gold and silver standard? Are BRICS in the de-dollarization real threats to USD? And what's a better store of value, raw bullion or graded coins? So if anybody has any questions, then we got some people here that have responded to us. Let's see. We got hello from Abdul. How's it going?
Hey, Abdul.
Hello, boss. Let's see. All right, here is one. I believe the gold standard anchors currency the scarce value, protecting its purchasing power.
Yeah.
So yeah, I agree. That's very important. Gold really has held its value over time, and it will continue to do so as treasuries and central banks relate it. Let's see. Let's see. Graded. Kind of cut off here. Graded coins often outperform raw bullion as store value because of their scarcity condition. That's true. Yeah. I mean, minting precious metals to coins has held up value over time. I mean, even if it was a coin from BC time, like it holds up, and if you have a shekel from back then, it's going to be worth a lot. Let's see. We got a question. Let's see. BRICS. My view on BRICS is strategic to weaken U.S. dollar dominance by shifting global trade. I'm assuming that's what you mean. Yeah, I mean, U.S. still has a chance to become, the standard for commerce. We still use U.S. dollar across the board, but time will tell. We're in huge debt. Like John mentioned, we hit $50 trillion our debt ceiling. If we don't do something about it, if we turn into another currency or accumulate more gold on our books, Bitcoin or other commodities, it's looking kind of grim for us. But there's hope. U.S. has been a power for a very long time, and I feel like we'll continue that. We just have to pivot and put ourselves in front of uh, with this administration. Obviously, at least my take, and I can't speak for others. I feel like the last administration made us look a little weaker, especially with like Russia and BRICS. They're trying to work around us, but I feel like we have a chance to kind of take action and really do something major. So if it is laws around digital assets, if it's using the gold and silver as a currency. I know Florida is using it as currency as well for 2026. So if more states move towards having gold and silver as a standard for commerce, I think we can put ourselves in a better position. But like mentioned, more money, and if If we go back in the quantitative easing, at least publicly, to be, a short-term increase in commodities, long-term effect for a debt ceiling. So time will tell.
Yeah, you've heard of gold backs, right?
Yeah, yeah.
Yep. So we're authorized dealers of gold backs, and I have some, and I just they're beautiful. They're so people that don't know what they are, excuse me, they're basically gold currency. So you have $100, 50, 20, 10, 5, 1, and then a 50 cent. They're all notes, but they're gold. There's gold in them, and so I was at a market down here in Hope Sound, Florida, and one of the vendors that they have a huge cattle ranch out west, but I saw a sign, "We accept goldbacks." So then I went there. I told my girlfriend, I was like, "Oh, we need to bring those goldbacks with us." We were
Nice.
sitting, and I was figured let's use them. So I bought 100. It was $168 worth of steak. Just
Ah,
great meat, like
oof.
best, right from the farm. And it was 18 goldbacks for $168. So at that exact time, the conversion was one goldback was like almost $9. Um, no, that wouldn't make it was higher than that. Point being, that's a perfect example of a currency that can't be eaten by inflation. So I could buy goldbacks today, and in 2 years, in a year, I don't have to worry about inflation eating through that goldback. And more vendors down, at least in Florida, are using goldbacks, which I like to see. In fact, this farmer told me, um, and it wasn't like some podunk farmer. They had their stuff together. You could tell it's a large operation that they have. She says they accept silver for payment. People
Wow.
They accept gold for payment. And I was like, boy, oh boy, after all this time, we're going back to the way things were at the beginning of our conversation.
Yep.
It's just funny to see that, but it makes sense. I get it. I get why we're doing that, why I do it, and why more people should do it. But real quick, that first question that was asked about is BRICS a challenge to the U.S.? No,
Yeah.
and uh, the dollar has been the standard, the world reserve currency since Bretton Woods in 1944.
Yeah.
That anytime soon, not anytime soon.
Right.
And what's the other question in there? Should the U.S. return to gold standard? I would love to see that being a gold owner. Uh, I don't know how that would work because the amount of, I mean, we could do the math. It might take a second, but if what our debt is, 38 trillion in debt divided by the total amount outstanding, or at least the gold that the United States has, supposedly has. I've It could be as much as 20,000 an ounce would bring us to not cover our debt, but it's a start. But imagine walking in one day and the ask is the bid is $20,000 an ounce. That that's happening like that. No, but and the other thing, Dustin, is like what the people that the political class, they don't want to being on this standard handcuffs them. They're not going to do that. They're not going to be handcuffed with their spending. They love
No.
it. That's how they get elected, and that's how. Well, I should say that's how they continue to get elected. Because once they get in there, they start spending and spending for supposedly their constituents. And then, what's the better store of value, raw bullion or graded coins? There's not a clear, concise answer for that. They're both good.
Yeah.
Raw They both have pros and cons. Raw bullion, you're tied. The cons are you're tied to spot. Uh, you know, um, the the pro for that is that bullion is always very very liquid. But graded coins, the right graded coins, you get benefit of both, and we've talked about this before, where you get let's say a rare $20 double eagle, you get an ounce of gold there technically an ounce of gold. It's not pure. It's actually 90%. But you also get the numismatic value, so you're getting the best of both worlds. So if gold dropped by $1,000 or even $2,000, and you have this much rarer coin that's also gold, but has numismatic value, it's not going to really affect the value of that coin, if any, if at all. Whereas the metal by itself, you're directly tied to the metals. But that's why you need to talk to a top-notch dealer to get coins that are going to fit your profile and be best for your portfolio.
Perfect segue to give us a call, 561-310-8341. Email us at uniquecoins@gmail.com. Website is coinandcurrency.net. Check us out on eBay at American CC. So be sure to get a hold of us if you guys have any questions on any coins or for anything really that we mentioned. So yeah, I think that's it for us for the day. Yeah, just leave our audience with any advice or anything for the week.
No, I mean, it's going to be the government shutdown. I watch, obviously that affects everyone, and metals look like they're bouncing again. The spread on silver is still really wide. That's everything I need to know. Like right there, I looked at it earlier. It was over $1 spread, so
Wow.
that has not changed. And I think that they flooded the paper market, by they being large institutions that have massive exposure for delivery of the metals. They're able to manipulate the markets because they're not huge markets. They are large, but not like equities or debt markets. So you can leverage trades and you can force prices to go a certain way. I think that we're going to see that in the near future, where you're going to see another pop in metals. I think we're consolidating right here, and I think you're going to see gold starting to run up again, and silver. There's going to be a big squeeze, and if called on delivery, the shit's really going to hit the fan. You're going to then the whole system just exposes what it has been, where people are trading and making money and taking losses on things that just the paper. The metal's not even there to cover delivery if need be. So that's like naked trading, right?
Right.
We'll see.
Hmm.
I would watch the spread on silver. Keep watching that.
Yeah. Hashtag silver squeeze, everybody.
Thanks.
uh, yeah, it's a big conversation on X. So yeah, this is American Coin Currency. We're here every week, 1 p.m. Eastern, every Thursday. Check us out on YouTube and most major platforms. You can check out our previous videos as well. And then just to plug us in just one more time before we go, of course, no shameless plugs. Give us a call, 561-310-8341. Email us, uniquecoins@gmail.com, website, coinandcurrency.net, eBay, currency. Check us out. We have a lot of inventory. Or just give us a call. We have a lot of stuff that's not on eBay as well. So, yeah, this is Real Money Standards Through History, Why Nations Still Keep Their Gold in 2025. And we'll see you guys on the next one. Have a great day. Peace.
Yeah.
See ya.